And a huge moment for Bitcoin, forming a very important pattern which could take us up higher on the price action. We've also got an update from Christine Lagarde on inflation, plus Coinbase hits back at the SEC, and Jerome Powell comes out with some important remarks. We got loads to cover off. Smash the likes. Don't forget to subscribe if you want to trade in these moves. Bybit, BitGet, exchanges below. You guys know what to do. Here in the chart, I'm sat here looking at a very important double bottom pattern. Yes, a double bottom pattern is when you hit a level twice, managing to bounce both times from this 30,000 level here on Bitcoin, holding it as support, which is very critical. We cannot just assume that we're supposed to be above 30. We've now proven twice here that we deserve to be above 30. And now, if we can come up to the neckline here on this W pattern, and the neckline sits here at 30,800, if we can come up and break through with good volume, we could be heading on our way to an important price target. I'm going to share that exact price target with you guys in this video. Also, if you haven't watched my video from yesterday, make sure you show some love on that video where I explain exactly my biggest crypto loss to date and what lessons I learned from it. Also, Coinbase hit back here at the SEC, and we know this is a major narrative that's going to continue for a long time in crypto, and this is going to dictate the swings up and the swings down in the crypto market. So the Coinbase officially give their first response to the SEC, and this is what they said. It's an argument Coinbase has advanced before in public statements. It says that cryptos on the exchange's secondary market platform are not part of any arrangements where a promoter is selling an asset tied to a contract. So they're saying it's not an investment contract, therefore it does not meet the criteria of the Howey test, right? We know this is the argument they're going down. The issuers of the tokens owe no obligations to investors. Those issuing the tokens, there's no obligation to the investor like with a security. Because no such obligations are carried out in the transaction over Coinbase's secondary market exchange, and because the value that Coinbase purchasers receive through these transactions inheres in the things bought and traded rather than in the businesses that generated them. The transactions are not securities transactions. Let's continue here. Even were the SEC correct, so they're saying even if the SEC were correct, that the assets and services were within scope, within their jurisdiction, because Coinbase is saying, we don't think it's in your jurisdiction. You're overreaching here, but let's assume you're right. Let's assume it does fall under your jurisdiction, Gary Gensler, right? It is an investment contract. It falls under your jurisdiction. Well, in that case, this action must be dismissed on the independent grounds that it violates Coinbase's due process rights and constitutes an extraordinary abuse of process. And what this is, of course, referring to, guys, is the constant effort which we've covered on this channel that Brian Armstrong said, I kept trying my best. This is not, trying to paint out another person as a bad person. You can't say this is SBF or CZ. This is the teacher's pet, Brian Armstrong, publicly listed on the NASDAQ, right? Trying to adhere to all rules and regulations. They want all of the, they want to make sure they're regulated everywhere. And look at this. For years, Coinbase has voluntarily submitted to regulation by multiple overlapping regulatory bodies, has adhered to the public and limited formal guidance from the SEC, senior SEC staff, and the courts about the application of securities laws. But here's where it gets interesting. And has begged, look at the wording, begged the SEC for guidance about how it thinks the federal security laws map onto digital asset industry as the SEC actions reflected. But look at this, guys. The SEC has chosen to pursue enforcement action over rulemaking. And this is where it stands, right? We know, we've covered up the interviews with Brian Armstrong that he gave, where he said he kept trying his best. He kept getting denied meetings. They wouldn't even meet him face to face. This is a very important update. We're going to have to continue to make sure our ears are tuned into the updates being said here. We also can see that Europe and Christine Lagarde say inflation is too high. We haven't resolved it. Here where I'm sat in London, they have not got a clue. At least in the States, inflation has started to come down. But even there in the States, where you're starting to get to that 4% level, not 10% like where I am in London or Europe, Powell still says more restriction is coming. And he even alluded to the idea that we can still have multiple rate hikes consecutively. So guys, we're a bit premature here. Yes, we had a pause, but as far as he's concerned, it was just a pause. It was not a U-turn. It's not going back to now cutting. He still wants to keep hiking, and he may even hike a couple of times in a row. So the market needs to reflect that. He's keeping the market and the financial conditions tight because he's seen the market has rallied and he wants to keep it in his spot. Bitcoin sits here in a nice W pattern, and you will not want to miss out on this opportunity, right? Again, you don't want to get rejected from this level. You want to make sure that we break above with good volume. But if we can break out from this W pattern, which I'll be monitoring, the price target I'll be looking for from a conservative level here at a point of breakout is to take us up to the 31,600. Now, why is that important on the hourly? Well, if we can work our way through this W pattern up to 31,600, we would have created an important higher high. We would have managed to curl around here at the bottom and create a higher high and continue uptrending. And if we can continue uptrending here on the hourly, that sets us up then on the daily chart to continue working our way towards our bigger price targets of 37,000. You guys know the patterns I'm looking at right now. This falling wedge gives you an extended pattern up towards 37. But of course, this bit here is the resistance we're facing. That small W pattern on the hourly chart will allow us to clear this cluster of resistance and continue our way to our price target. More importantly than that, clearing this level here, getting up to 31.6, will show that we've managed to clear our neckline from our big cup and handle pattern. Again, price target of 45,000. So this is a very important moment on the hourly. Don't, belittle that moment on the hourly. Breaking that W pattern, getting to 31.6, heading higher from there. There's small wins which help us make the bigger wins on the bigger patterns which we're looking for as well. So super critical levels to watch out for. You are seeing a certain movement on some altcoins today. Solana up 12%, some altcoins like ADA moving up 3%, as you'd expect, 4% here on Chainlink. So we're starting to see a little bit of life in some of these altcoins, but nothing hugely to write home about. You got Serum up 17%, Synthetics up 11%, Pepe moving again 12% here on the day. We are starting to see a little bit of froth come back into this market. If we look at total 3, you can see here this week we're up 1.6% more money flowing back into altcoins. So not too shabby, right? This was when you had the big SEC lawsuit and you fell all the way down here. It's recovered quite nicely there. If you look at from the bottom there, you've seen that pretty much 10% money has come back into altcoins, excluding Ethereum. Remember, this is total 3. And last but not least, let's quickly check in on the dollar index. Of course, we have to look at this dollar index to make sure it doesn't get out of hand. You can see here on the daily chart, it's still wedging itself into this triangle, right? The dollar index balls will want to break out of this triangle and head to the upside. We want to keep it to the downside. So we don't mind it coming up here as long as we can send it back down and lose this pattern to the downside. That will then mean on the weekly chart, we keep it moving downwards. That's the important thing here on the dollar index. We don't want a period where this dollar index rises. Remember, if Jerome Powell keeps coming out and being hawkish and aggressive with his interest rates, dollar index can start to recover. It can start to want to reclaim its EMA ribbon, and that would spell pain for Bitcoin and will stall our progress. So we don't want to see that. We want to keep this moving to the downside, keep inflation coming to the downside, show that the economy is doing okay and that we're coming to the end of the rate hiking cycle, bring risks back on, and that can send this to the downside. It's a lot to play for here in the Bitcoin market. Make sure you go watch my video from yesterday, very different style video where I open up and share my biggest crypto loss to date and how I handled it, the lessons I learned, and any tips for you guys so you don't have to make an equivalent size loss. If you appreciate these quick, timely TA updates, smash on likes, make sure I know about it, and I'll see you in the next one.